Hello everyone. Welcome to this course series on Kingdee AI Suite. In this session, we will focus on accounts receivable. We will explore the content in 4 parts: product, concept, and architecture, key concepts, business process flow, and highlights, and core features. First, let's begin with the product concept. This application is designed with the concept of automation, integration, and transparency, serving as an AR manager. Integration means this application works seamlessly with other applications such as supply chain management, payment management, invoice management, general ledger, and tax, enabling integrated services for business, finance, and taxation. Automation means the system supports automatic offset by association and core document number, as well as automatic accrual accounting upon approval of a sales goods issue document. Transparency means the system provides multi-dimensional AR data analysis, giving enterprises clear visibility into data. This enables enterprises to identify bad debt risks early and collect payments on time, thereby helping them address challenges and strengthen management. Next, let's take a look at the product architecture. We have basic data, initialization, daily processing, AR receipt offset, bad debts, statement inquiry, and other modules. Daily processing mainly revolves around accrued receivables and accounts receivables, ensuring proper process control and smooth business flow, and ultimately completing the AR receipt offset. These are the key concepts. Before moving on, please take a moment to read them to better understand the upcoming content. Next, let's briefly go through the business process flow. During a sales goods issue, if no invoice is issued or automatic accrual upon sales goods issue is enabled, the system generates an accrued receivable document. This follows the process for recognition of revenue not invoiced. Upon approval of the accrued receivable, the system performs revenue and cost recognition for cost carry forward and automatically cross-checks the sales goods issue. After invoicing, the accrued receivable is converted to accounts receivable. Upon approval of the accounts receivable, the accrued receivable is automatically reversed, generating an accrual reversal document. If invoicing is completed during a sales goods issue, the system directly converts the sales goods issue to accounts receivable, following the process for recognition of revenue invoiced. Upon approval of accounts receivable, the system performs revenue and cost recognition for cost carry forward. After payment collection, the system completes the AR receipt offset. Now, let's go through 7 highlights of this application. The first highlight is sales accrual account. If no invoice is issued for a sales goods issue, the system converts the sales goods issue to accrued receivable. Upon invoicing, the system converts the accrued receivable to accounts receivable, and the original accrued receivable is reversed, generating an accrual reversal document. The second highlight covers multiple offset modes. Offset transactions can occur in many scenarios, such as AR receipt, offset, write-off, and receipt refund netting. The system provides various methods for offset transactions, including auto offset, manual offset, scheme-based offset, scheduled offset, and import offset. The third highlight is new revenue recognition. The system supports revenue recognition after a sales goods issue, including recognition of revenue not invoiced and the direct conversion to accrued receivable from the sales goods issue. After invoicing, the system converts the accrued receivable to accounts receivable. The system also supports recognition of revenue invoiced. In this case, the sales goods issue is directly converted to accounts receivable. For the pre-invoicing flow, the sales order is directly converted to accounts receivable. The fourth highlight is period-end foreign currency revaluation. For accounts receivable balances in foreign currencies, the system can perform foreign currency revaluation by document and then generate an AR foreign currency revaluation document. This document is automatically reversed at the beginning of the next month. The fifth highlight is credit transfer. The system supports credit transfer in triangular debt scenarios. For example, it can transfer accounts receivable from customer A to customer B. It also allows for reassignment to other sales departments or salespersons for internal management needs. The sixth highlight is customer reconciliation statement. The system supports querying a customer's accounts receivable balances and composition details, and sending reconciliation letters to confirm the accounts receivable balances with the customer. The seventh highlight is AR retention money. The system automatically generates a retention money document based on the retention money percentage and supports payment collection upon maturity. Now, let's take a look at the core features and their applicable scenarios. We start with receivable estimation. This feature allows accounting when no invoice is issued for a sales goods issue. It supports business scenarios such as standard sales accrual, service sales accrual, sales expense accrual, and miscellaneous receivable accrual. This feature supports the conversion to accounts receivable and revenue and cost recognition. Then we have receivable. This feature supports confirming the accounts receivable when a sales invoice is issued. It links the sales invoice to payment collection. The system supports populating the receipt plan from documents such as orders. Based on the principle of revenue and cost matching, costs are carried forward in the current period when revenue is recognized. In the ordinary sales business process flow, we confirm the accounts receivable through either of these two features. The system simultaneously performs revenue and cost recognition and carries forward the cost. After invoicing, we can generate a receipt through receivable. After payment confirmation, the system completes automatic offset. When a sales return occurs, a red letter invoice must be issued, and a refund must be made to the customer. The system supports return and refund transactions by initiating refund processing from negative accounts receivable and automatically completing the offset of refund receivable. If a bookkeeping error occurs, the system supports reversing the original transaction to correctly reflect the account amounts incurred in the ledger and generates a reversal document after the reversal. After a reversal is performed, the reversal document is automatically offset against the original accounts receivable. AR write-off is typically used for credit transfer, such as triangular debt or enterprise bankruptcy liquidation. The system supports write-offs according to receipt plans and multi-dimensional write-off processing. We set the retention money percentage and due date on the accounts receivable page. The system automatically generates the retention money document, and the receivable enters the collection process upon maturity. The enterprise prepares a provision for potential bad debts based on accounts receivable balances. When an accounts receivable item is clearly identified as uncollectible, the enterprise needs to recognize a bad debt loss. If part of the amount is later recovered after a bad debt loss has been recognized, the enterprise needs to process a bad debt recovery. To achieve revenue and cost matching, revenue and cost recognition is cross-checked with the sales goods issue. For the revenue and cost recognition converted from the sales goods issue, the system supports automatic cross-check with the corresponding sales goods issue. Now, let's take a look at scheduled offset. This feature is applicable to frequently used accounts receivable items that require regular offset. For documents that are not processed through auto offset or scheduled offset, we can perform manual offset through the offset workbench. For foreign currency transactions, the system can perform a period-end foreign currency revaluation on foreign currency balances and automatically reverse the resulting AR foreign currency revaluation in the next month. This concludes the introduction. Thank you.